I had a client ask me this week, Dan, what do you think will happen to the housing market if mortgage rates continue to stay up and don't come down? Well, the answer that I gave him was based off of data and was based off of trends, and you have to look at what we're seeing right now. We're seeing a lot of sellers, a lot of homeowners own their homes free and clear. We're also seeing a lot of homeowners also have rates in the 3s and the 2s and even the 4s. And so they're not extreme. They're in the best financial situation relative to their mortgage of their life. So they're not extremely motivated to move unless death, divorce, relocation, destitute, running out of money, stuff like that. We're not seeing a ton of that. And so there's not a lot of seller motivation out there. And so since there's not a lot of seller motivation, I would continue to see exactly what's happening right now. We're seeing softening in some markets. So if rates don't come down, I think you're going to see the real estate market level off. We didn't really see it level off over the last 3 years because there was a lack of inventory. Now we're starting to see some inventory, so I think we're seeing some softening. So the answer to my question, if rates continue to stay up, which I don't believe they will because the Fed has been very clear, and so has the government, that the Fed rate needs to be reduced by 200 to 300 basis points, which is 2 to 3 percentage points. If that happens, mortgage rates will indirectly fall as a result, and you'll see more movement in housing back up to like it was previously, where you saw multiple offers and home values going up. So that's the answer to my question. I hope that helps you because you may be thinking that as well. That brings me to this week's Making Sense of Your Market episode. It's Friday, July 25th, 2025. I always talk about what did mortgage rates do week over week. Mortgage rates week over week, almost the same. Same thing, pretty soft. I was joking with a client this morning and I was like, you know what? I'm heavily invested in the stock market. So I talk to my financial planner and mentor often. I am somewhat invested in crypto. And so I'm watching crypto often. And I'm in the mortgage industry, so I'm watching interest rates every single minute of every single day. And I'm like, what has happened? Like, I feel like all three of those buckets are on cruise control right now or in sleep mode. Nothing's really going on in the stock market. Crypto's just fallen asleep this week, with the exception of XRP earlier this week, and then that kind of calmed down. And then mortgage rates, same thing. So, 675-ish to 6875. Not bad, not good, but definitely we're not seeing that drop. Like we saw some momentum there for a while, and then we kind of hit that 675 with 30-year fixed rates and really haven't seen much improvement after that. So these are for 30-year conforming, conventional 30-year rates. Not a rate quote. There's so many things that go into a rate quote, like credit score and type of property and down payment, all that stuff, debt to income ratio. So just kind of a trend. That's really what I wanted to discuss this week. Not a whole lot moving. If you need anything or if you have any questions, let me know. I did want to bring up brunch suggestions. So a lot of these videos at the very end, I give a local brunch suggestion. I love going to brunch on Saturdays or Sunday mornings. Deru in Kirkland. If you haven't been there, DERU in Kirkland, you'll find it in a neighborhood. You'll find it absolutely packed. One of the best brunch spots in the Northwest. I love it. Love going there with my wife. In fact, we're going there this weekend with a friend from Utah. So if you have any questions, let me know. We'll see you next week with another update. And I always love bringing these to you because I hope you watch them and I hope you know that I'm there for you if you need anything. Bye for now.